Adjusting journal entries. These are some of the most important journal entries that are made within an accounting system. And so, in order to give you an overview of these, we'll be looking at several examples. There are 4 adjusting journal entries that we will look at together. Each one we will take in tandem. I have the information to the left. In the center, I'll work through some of the mechanics. And then to the right, I'll record the adjusting journal entry that's appropriate. So this is for year-end 2020 when we're looking at this. So let's start with the first one. A company has salaries payable of 0 at the beginning of the year. That same company has 8 employees. The employees, 5 earn $700 per week. So I'm going to just go ahead and put 5. And the pay per week is $700. And 3 earn $600 per week. So I'll go ahead and I will put 3 and $600. Now it says that the company year ends fall on a Tuesday. So if we look on this, December 31st is actually a Tuesday. Now that's important because in making the year-end adjusting journal entry, we need to determine what will be the entry at December 31st, 2020, so this is 2020, in order to record the appropriate salary expense. So let's look at this together. Our total payroll for our 5 employees is going to be 700 times 5, which is equal to 3,500, plus 600 times 3, which is equal to 1,800. So my total payroll, which I should have had an additional in there, but my total payroll is 1,800. But the daily amount is going to be equal to 3,500 divided by 5 days per week and 1,800 divided by 5 days per week. So the sum of my daily payroll is going to be 700 plus 360. But because the year end actually falls on a Tuesday, I need 2 days for my adjusting journal entry amount. So how much is the salary expense for the last 2 days in 2020? It's going to be equal to 1,060 times 2, and it says 2,120. So my adjusting journal entry is going to be, I do need to stretch this out just a little, and in doing so, I need just to make room so everything appropriately shows on the screen. I'm going to debit salaries expense, so just bear with me, and I'm going to credit salaries payable. And the amount of salaries expense in 2020 at year end is equal to 2,120. So now my financial statements will reflect the appropriate salaries for the year 2020. So let's go now and look at journal entry number 2. I'll go ahead and change the font on this so that you can see it. And now let's read through. Unearned rent revenue for the same company is $429,000. So $429,000 is the unearned rent, which means in the future we will earn this rent. So let's read up about it. The company sublets space as of November 1st. Each tenant pays a $5,000 security deposit. Okay, it's refundable at the end of the lease. Okay, rental contracts as follows. So we know that one set of contracts was signed on November 1st. The term, again, and this is, in fact, let me just go put term. The term was 6 months. So term in months. I can just do that just again. There we go. The monthly rent is $6,000 and the number of leases that I have at that rate is 5. But then I signed an additional 4 on December 1st, but this time for $8,500. So how much rent would I have earned of this unearned amount totaling $429 at December 31st. So let's work through that. The amount of rent that's earned for my contract that's signed November 1st is going to be 2. The rent that's appropriate is $600. The number of tenants that I have at that rate is 5. So again, I've earned 2 months, November and December, and in order to determine the amount that's earned, multiply 5 tenants times the monthly rent times 2, 60,000. Now let's look at the other contract. In this, it was signed December 1st, which means there's just 1 month of rent that's earned. The rent is $8,500, so I earned a little bit more, which is great. I have 4 tenants that are paying this. So in this case, 4 times 8,500 is equal to 34,000. So let's go ahead and put an underline. The total rent that's earned is going to be the sum of these two numbers, which is equal to $94,000. So my adjusting journal entry in this case, again, I'll go ahead and we'll put that up here. We'll change the font to navy blue. In this case, I need to reduce the unearned. And the way that I reduce the unearned is I'm going to debit unearned revenue because it's a liability. And I debit it for $94,000. So that's the amount that I want to reduce it by. And I'm going to credit rent revenue because revenue increases on the credit side. Now, an important question that's a great one to ask is, what is my new ending balance for unearned? Well, let's look at that together. The beginning unearned balance, we take this across, was equal to $429,000. Now, you'll recall that's given in this first line. The amount that was earned is what I want to subtract. So the amount that was earned is equal to $94,000. So I want to subtract that. So my ending balance is equal to sum of those two, unearned, ending balance, and I just want to put this right here, after year-end adjusting journal entry. And that's important. My balance sheet will now show $335,000. Let's go down and let's look at adjusting journal entry number 3. Go ahead and I'll change the font so that's easily to recognize. In this case, actually, the company has prepaid advertising and they prepaid $13,200, and that's for 2 contracts. The 2 contracts are shown below. Our role then is to determine how much of this prepaid advertising is used. So let's determine how much of that contract has expired. We signed the first contract, contract 1, on May 1st. So how many months has there been between May 1st and December 31st? If you count it, you'll find that it's 8. So 8 months out of the 12 has expired. Again, how do I know it's 12? It's 12 issues of magazines, 8 months has expired. The total cost that I paid was $6,000. So $6,000 for 12 monthly ads. So the amount of expired advertising, let me just go and put advertising at the end of this. The amount of the expired advertising, if you watch this, is going to be 8/12. So I'm going to go ahead and make that a fraction. 8 divided by 12. 8/12 off $6,000. That amount is $4,000. And then let's look at contract number 2. Contract number 2 was signed October 1st. So I have used up October, November, December, 3 months. I'll go ahead and put 3. How many months in a year? 12. But how many months or how many issues am I signing this for? 24. So this is going to be 3 of the 24 issues I've used. And how much did I pay for it? $7,200. So in order to determine the amount of expired advertising, same thing. I'm going to take 3/24 of the total cost paid, and that's $900. So the expired advertising is equal to the sum of these two numbers, which is 4,900. My adjusting journal entry will look like this. Anytime advertising the prepaid has expired, now I have advertising expense. The advertising expense is equal to 4,900. And what I'm going to do is reduce the prepaid advertising by that amount. So my prepaid advertising is 4,900. So, important question again. What is the new ending balance for prepaid? Well, let's look at what it started out as. If we go back to the original, we see that advertising prepaid was 13,200. So that is what was on the balance sheet before the adjusting entry. I'm going to subtract the amount of prepaid that expired. And that's the same way of saying that's the amount of the expense. So that amount is equal to, let's go ahead and align that. It's equal to 4,900. And sum this up. So now my prepaid advertising, again, this is the ending balance after, I'll just go ahead and type it again. Ending balance after year-end adjusting journal entry 2020. Again, let me go ahead and align that, and we're done. And now we're just on the last adjusting journal entry. I'll go ahead and change the font so that you can see that clearly. This relates to notes payable. So whenever we have a note, there's always interest. And this note was for $60,000. It says it there. It said it's for 1 year, so that's 12 months, 12% interest, and it was issued June 1st of the current year. Now, what this means is that as of December 31st, I need to record my interest expense for 2020, even though I have not paid it. The formula for interest is principal times rate times time. So I went ahead and identified that for you. So let's go across and let's calculate it. How much is the principal? It's the amount of the note that was issued, $60,000. How much is the interest? It's 12%. Time. T represents time in the year that this note has been held. So in order to determine the time, let's look at how much months in the year has expired. If the note was issued on June 1st, how many months is there between June 1st and December 31st? So if you include June, July, August, September, October, November, December, you'll find that that is equal to 7/12. So the time is 7/12 of the year. And we literally make this, I'll just go ahead and put a slash to remind you, 7 divided by 12. So here's my interest expense. It's going to be 60,000 times 12% times, I'm going to open my parentheses, 7 divided by 12, close parentheses, hit enter, interest expense is 4,200. And just go ahead while I'm on this and bold all of my adjusting entries. So what is the entry that I make? Sure. I'm going to debit interest expense. Again, interest is the cost of money. And during the year 2020, this is the cost of the money. So that's important. And then I'm going to credit interest payable, which means that I owe this amount, that's accrued interest, 4,200. That is the end of my adjusting entry. And so in tandem, what we've done is 4 year-end adjusting entries, 4 different cases. One was for salary expenses, where the year ended on Tuesday. The second is we looked at unearned rent revenues to see how much of that rent was actually earned, and we came up with 94,000. In the third case, we looked at a prepaid where we prepaid advertising for 13,200, but then the amount of the expired advertising that was prepaid becomes advertising expense. And then finally, notes payable. Whenever we borrow monies, interest is the cost of money, so we make an adjusting entry for interest expense, credit interest payable. With that, we're done with these 4 adjusting journal entries.